Good afternoon, everybody. This is Jerry Katz. I'm the CEO of Premier Protection Insurance Services, and this is an emergency. And this goes out to all of you, whether you have a home or an investment property. But today's video is coming because if I wrote you an email, it'd be too long and you wouldn't read it. I want you to pay attention to this video, especially if you're a commercial investor and you own multifamily, commercial real estate, and those things just like me. 17 years ago, I founded Premier Protection Insurance Services. Why? Because I had this insurance expense on all my commercial real estate that I was buying in multifamily, retail, industrial, and so on. And I didn't like it because it cuts into my cash and cash returns, my NOI, my cap rates, et cetera, et cetera, et cetera. And it's required by the banks, right? Not only do we need insurance to protect all our assets, but it comes at a price to our operating expenses and our return on investment. So today in South Florida, especially Tri-County, and that's really where I'm focused, but it is happening across the state, into Georgia, into the Carolinas, and most coastal states, we are facing an emergency. And I mean emergency, meaning as high as 12 to 150% increases on insurance, especially in Tri-County, or if you own investment real estate on barrier islands within 1 mile to the coast that are built in the 1960s, 70s, 80s. If it's not new construction, you could, and we have seen this from our market, see 150% increase. I know, it's shocking. That's why I'm warning you now. If you're in the middle of a deal or purchasing, you need to reach out and get my estimates on those properties, especially the older ones, 1970s, 80s, joist and masonry, near the beach, within a mile, 2 miles. So I'm here to explain what's really going on with the insurance industry, right? Number one, it's not all the storms. It's fraud and public adjusters and the laws that we have in Florida, which they're working on and did a couple things last month with capping insurance fees. I'll give you one example. We write in Universal Property and Casualty. It's $1 billion carrier based in Florida in the personal lines world. We are closed in Tri-County. They won't accept anymore, and closed in most of Florida, but we have policies renewing. I talked to my marketing rep yesterday. She calls me once a quarter. She says, Jerry, we had 600 claims in 1 week from public adjusters in Dade County for Hurricane Ian. Last time I checked, Hurricane Ian was not in Dade County. It's the public adjusters. The insurance forms say if you have a named storm within 250 miles of your location, you have a right to make a claim. So what happens? Public adjusters, they knock on your door, they hand you a $100 American Express gift certificate saying, hey, I get you a new roof, I see this, I see that, sign here. And they take a claim that may be no claim at all, an old damage, and they turn it into a $100,000 claim, and they take 20%. So that's your main reason. And that works around water damage claims, which most carriers are putting caps on water damage today. Leaky sinks, leaky toilets, 10, 15, 25,000, they're removing that coverage. Crazy. But that's where it comes from the public adjusters and the claim amounts and so forth. Next, Hurricane Ian, obviously billions of dollars worth of damage. That is real. But here's the big thing, and why are we doubling? Most people don't understand. But for every dollar of insurance, about 50 to 60 cents on the dollar is reinsurance that covers 80% of a claim. So $1, 50 to 60 cents is spent on reinsurance. The rest is admin, commissions for wholesalers and retailers. And then there's about 20%. If there's no major claims, that's where the return comes. So where do the reinsurance companies get the money to fund these reinsurance pools? They go to institutional investors, Fireman's Fund, Teachers Credit Unions, Goldman Sachs. In a low interest rate environment, right, like that we saw for years, institutions had nowhere to make money. So they would approach Lloyd's of London and they would invest their institutional money in reinsurance pools, hoping that there'll be no claims, right, or minimal claims, and they can make 4, 6, 8% on their money. Well, guess what? At the pace that interest rates have risen, okay, these institutions who didn't make as much as they wanted to because of the public adjusters in Florida, because of Hurricane Ian and so forth. They're pulling their money out. The capacity's gone. Why? Because an institution today can play it safe and buy a 5-year T-bill over 4%. 3 months ago, it was 2%. So there is institutional money flying to these interest rates that are safety in municipal bonds and everything like that. So what's happening? The reinsurance markets have no capacity. So how do you get institutions to invest in the reinsurance pools that can offer us capacity? I'll tell you this, how? By upping the return possibilities. So they double the price of reinsurance to attract institutional investors to have capacity. And that's why the rates are truly doubling in certain situations. Otherwise, the insurance industry, which about 60% of is Lloyd's of London reinsurance markets, unless they double the reinsurance cost, they're not attracting institutional investors. They can't take on the capacity, and we have no markets. And that's exactly what's happening today. In the world of Florida, we're going to end up going back to Citizens. Right now, our markets are closed because of the storm. But last week, I had maybe 1 or 2 wind markets in Tri-County that were even willing to quote, right, near the beach, 1 or 2 miles, 1970s property. The rates, $2.50, $3. What does that mean? That means 3 years ago, I could get you a policy for about $1 to $1.30 rate, which means with wind and hazard insurance, about $13,000 per million of coverage that you're covering. Not property value, replacement cost value. And that's exactly what we would pay. $1 million, $13,000 premium plus taxes. $250 to $3 rate means for every $1 million, it's now $25,000 to $30,000. So my point is how is this going to affect your cash flow, right? We're an agency of entrepreneurs for entrepreneurs. We understand the pain. So I have some solutions for you, right? And here they are. Number one, 15 years ago, we were writing mostly after Hurricane Ian and Katrina went through Florida. Almost all the capacity markets pulled out. Citizens was the choice for wind. Today, we're running dummy quotes with Citizens Wind. They have max limits. Can't even write some of my commercial. The quotes are more expensive than the open market. Now it's starting to flip again. So we may see a market in the commercial world where you're going back to Citizens. But honestly, if I quote right now that $2.50 market, that's a $10,000 policy. Citizens is $9,300, and they require 19 inspections for you to get it done. So we're in that mode today. Here's the other solutions I have for you. Number one, I know you know this, raise rents, especially in multifamily. A lot of our clients have not raised rents. In my multifamily properties, my rents are up over 40% in 24 months. So we are fortunate enough to live in South Florida where we can do that. You need to do it to absorb the costs. Number two, negotiate with your banks or we can do it for you. Meaning, do they require wind on everything? If you have a home, or an investment property 20 miles from the coast and you're using a certain bank, there may be a possibility of negotiating with them. I can refer on new deals several credit unions and several different banks that will not require wind on certain properties. Number three, you can always self-insure. A lot of you have mortgages and that is not feasible, but I do have a client with over 1,000 units who's negotiating with his banks. He's also taking, with certain banks, they say, okay, we'll waive the wind on this that's costing you $35,000 a year, but please deposit $100,000 with us in a CD form, paying you, 2-3%, and that's the cushion, but they're allowing them to go without wind. So there are tricks in this world to get things like that done, right? And then we have our solutions, meaning we'll negotiate with the banks for you. We'll play with replacement cost values for you. And that's another problem is real replacement cost values with inflation have gone through the roof. Even the insurance carriers will not insure at $300 a square foot, which is a realistic replacement cost value on a basic, structure today. So the insurance carrier will waive co-insurance, give you full coverage at $150 a foot because they don't want the exposure because they don't have capacity. And that's what's going on. So we have several solutions, including negotiating with banks, including, making sure that are the measurements accurate, with the property appraiser's office. What are the valuations? We have software where we can prove to banks that the valuations are lower. You're not covering loan amounts, you're covering replacement cost value. So we do have solutions, but the main message, no matter how many solutions I come up with, these rates are going up. Minimum is 12%. That's Citizens' newest rate hike as of November 1. Some properties, depending on location and year built, are up 150%. I don't want to send you a renewal quote, right? That will shock you, right? And that's what's happening to us. And this has really, really increased since Hurricane Ian and even in the last 6 months, where we are literally getting quotes that are doubling. And by the way, it's a renewal quote that was offered to you from the same carrier that had you last year and you have no losses. Then I have to take that quote and go to the market, and there's no capacity. 1 or 2 quotes that are offered, or they don't want that risk. They don't want that risk. So they're all scared, lack of capacity, and this is a real emergency. And I'm telling you this so we can create solutions now, right? Even if your renewal is 6 months out. After this next storm, which is about to hit us this evening, Category 1, I'll have less wind markets than I did last week, obviously. And the 2 or 3 that were available, maybe there's only 1. So I just want everybody to be prepared. This is an urgent message. I know this is a long video, but this is real, right? And no one gets the job, I believe, better, done better than us. Why? Because we understand, right? Our job is not to sell you high premiums and do all these things. We build long-term relationships based on value. We want to deliver you out-of-the-box solutions. Find a way no matter what, not just an insurance agency. We'll refer you banks. We'll work on appraisals with you. We'll come up with anything we can, including how to self-insure. Say you decide to self-insure and go without wind, because that's the big piece of the policy, maybe 65% of the premium. Well, maybe you should invest that in hurricane windows and cutting all the trees around nearby. So there are ways. Everyone has a different risk tolerance, and that's why I'm putting this video out, because it's important you understand it's coming. If you haven't got the renewal yet, it's coming. And I know 12 to 150% is crazy, but that's the range and what's happening. We are here for you. We have solutions, and we're working 3 times as hard this year versus last year because of this crisis. Take this video seriously. If you have any questions, reach out to me. Run your spreadsheets, run your cap rates, run your IRRs, your return on investments, your cash on cash. Be ready. The expenses are going up on the insurance side to some degree, no matter how creative we get. But I know that if anyone can deliver, it's me and my team. For my clients, you. Remember always, we are loyal to clients, not the carriers. Good luck. God bless.